How small apartment investors can develop an asset allocation strategy, establish investment objectives income-focused, emphasize stable assets like real estate and fixed income for consistent cash flow, growth-oriented, allocate more to equities and alternative investments for higher capital appreciation potential, balanced, combine income and growth strategies for moderate risk and stable returns, assess risk tolerance conservative investors, prioritize capital preservation with higher allocations to real estate, bonds, and defensive assets. Aggressive investors. Focus on higher risk, higher return assets like equities, REITs, and alternative investments. Moderate investors. Aim for a diversified mix with equal weightings across income-generating and growth-oriented assets. Design a target asset allocation example. A moderate investor's portfolio could include real estate, 40%, stable cash flow and appreciation, equities, 30%, growth potential, fixed income, 20%, stability and income, commodities, 5%, inflation hedge, alternative investments, 5%, diversification, adjust based on market conditions, bull market, increase exposure to growth assets like equities or real estate syndications, market downturn, shift toward defensive assets like bonds or cash reserves to preserve capital, inflationary environment, allocate more to real estate, commodities, or inflation-protected securities. Periodically, rebalance portfolio. Set thresholds for deviations from target allocations, for example, plus and 5%. Use automated tools or investment platforms to monitor and execute rebalancing. Review portfolio performance and goals annually to adjust target allocations if objectives or market conditions change. Example: adjusting portfolio allocations based on market conditions. Scenario: a small apartment investor's initial allocation. Real estate, 40%, equities, 30%, fixed income, 20%, commodities, 5%, alternative investments, 5%. Market downturn. The investor reduces equities from 30% to 20% and increases fixed income from 20% to 30% to stabilize the portfolio. Real estate allocation remains unchanged for consistent cash flow. Bull market recovery. The investor increases equities back to 30% and reduces fixed income to 20%, capitalizing on market growth. Benefits of strategic asset allocation for small apartment investors. Risk control. Allocations tailored to risk tolerance ensure portfolios remain aligned with investors' financial capacity and objectives. Optimized returns. A mix of assets balances risk and reward, enhancing long-term portfolio performance. Market adaptability. Tactical and dynamic adjustments capture market opportunities and minimize exposure to adverse conditions. Portfolio discipline. Rebalancing enforces adherence to target allocations, preventing emotional decision-making during market fluctuations. Summary: effective risk management and asset allocation are essential for small apartment investors to achieve portfolio stability and optimize returns. By setting clear investment objectives, assessing risk tolerance, and employing strategic, tactical, and dynamic allocation strategies, investors can manage risk exposure and capitalize on market opportunities. Regular rebalancing ensures that portfolios stay aligned with target allocations, promoting financial resilience and long-term investment success.